Assalamu alaikum students. How are you? I hope you all are doing good and enhancing the knowledge from the videos. So once again students, welcome back to my economics class. So let's begin the video. So we are continuing from chapter 9, fiscal economics. So till now you have learnt about the public expenditure and public revenue. You come to know about various public expenditure which usually governments spent on the public for their welfare. And you also learned about the public revenue, which means the income of the government. And you know very well the major source of income of the government is tax, obviously. So you come to know that how the government earns its income and how it's spent on the public welfare of the country. Till now you have studied this much. So let's have a look on the concept which today we are going to cover in this video. So let's have a look on the points. First we are going to study about the GST. Then you'll come to know about public debt and its types. Then the third is causes for the increase in public debt. And the last one is methods of redemption of public debt. So starting from the meaning of GST. GST is a tax that customers have to bear when they buy any goods or services. Like you come to know about the direct tax which the person have to pay on his income. And now we are studying about the indirect tax, that is GST, that is goods and service tax, which is imposed on the goods and services indirectly, and services such as food, clothes and transportation, etc. The concept of GST is that it is an indirect tax, that is the tax is not directly paid by the customer to government, rather levied on the manufacturer or seller goods and the provider of services. The seller usually add the tax expenses into their cost, and the price of the customer pay is inclusive of GST. Actually the manufacturer pays the amount of tax to the government, but it also the manufacturer also include that amount of tax in the price of the product. So indirectly that amount is paid by you. That means the customer, indirectly the customer is paying the amount of tax to the government, but firstly it is paid by the manufacturer or seller. So in this is the most cases you end up paying a tax even if you are not an income tax payer. So now have a look on the history of GST. Like the Goods and Services Tax Act was passed in the Parliament on 29th March 2017. This tax came into effect from 1st July 2017, which is very important day to remember students through. And through this implementation of the 101st Amendment of the Constitution of India by the Indian government, it was launched by Narendra Singh Modi. GST replaced existing multiple tax levied by the central and state government, and the slabs, goods and services, are divided into 5 different tax slabs for collection of tax, that is 0%, 5%, 12%, 18% and 28%. Now have a look on the components of GST, types of GST. The first one is CGST, that is Central Goods and Service Tax. Second one is SGST, that is State Goods and Services Tax. Third is Integrated Goods and Service Tax. So starting from first we will learn about CGST. CGST is a part of Goods and Service Tax. It is covered under Central Goods and Service Tax 2016. Taxes were collected under Central Goods and Service Tax will be the revenue for central government. Whatever is collected under this CGST is the revenue, is the income of central government. Let's move to the next point. The next point is SGST, that is State Goods and Service Tax. So it is covered under State Government Goods and Service Tax Act 2016. You have to remember these act and as well as date. A collection of SGST will be the revenue for state government. Obviously, if it is written as the Central Goods and Service Tax, it means whatever is collected under this tax, it means it will go to central government, and whatever is collected under SGST will be the income of state government. The third point is integrated goods and service tax. So it comes under the Act, Integrated Goods Service Tax Act 2016. So basically the revenue collected from IGST will be divided between central and state government as per the rates specified by the government. Actually, when import of goods and services is commenced between two states, then this type of tax is levied. Like for example, if the goods or services are transferred from Rajasthan to Maharashtra, then the transaction will come under IGST. Now have a look on the advantages of GST. First point is mitigation of cascading effect. So under GST administration, the final tax would be paid by the consumer for the goods and services purchased. As I told you, the tax is finally paid by the consumer. However, there would be an input tax credit structure in place to ensure that there is no slumping of tax, that there is no double effect of tax. The next point is abolition of multiple layer of taxes. One of the very much important advantage of GST is that it is integrated different tax lines such as central excise, service tax, sales tax, luxury tax, etc. into one consolidated tax. It prevents multiple tax layers imposed on goods and services earlier. Before GST, there were number of indirect tax which were imposed on the goods and services, and which is a very complex task to understand. But by implementing GST, by implementing one tax in the country, it is making this very much simpler to understand this GST concept. So one of the main important advantage of GST is that it abolishes, it vanishes, it ends multiple layer of taxes. The next point is resourceful administration by government. Previously, the management of indirect tax was a complicated task for the government. As I told you, it was a very complex task to do. However, the GST establishment and the integrated tax rate, simple input of tax credit mechanism, and merged GST network, where information is available and administration of resources as well organized and straightforward for the government. It is making the taxation system very easy. Like we have to follow this 3 components only, and there are tax slabs which we have to follow, nothing else. So it's a kind of advantage of implementing the GST in our country. The next point is enhanced productivity of logistics. The restriction on interstate movement of goods has reduced. Earlier, logistic companies had to maintain multiple warehouses across the country to avoid state entry tax on interstate movement, but with this, it is enhancing the logistic business also, transportation business. The next point is creation of a common national market. Like GST gave a boost to India's tax to GDP ratio that aids in promoting economic efficiency and sustainable long-term growth. It led to uniform tax. Uniform means one tax law among different sectors concerning indirect tax. It facilitates, it helps in eliminating economic distortion problems and forms a common national market. So the last point of advantage of tackling is tackling corruption and tax leakage. Like with GST online network portal, the taxpayer can directly register, file return and make payment of the taxes without having to interact with tax authorities. So a mechanism has been devised to match the invoices. Invoices mean bills of the suppliers and buyers. This will not only keep a check on the tax frauds and evasion, but also bring in more businesses into the formal economy. So it is making this all indirect tax into online system, which is, will be very difficult for the fraud people to avoid tax. Actually, they have to pay tax for doing the business. They can't escape from this, and this is one of the another advantage of GST. So let's understand the meaning of public debt. So as I told you that the government earns public revenue, and they have to spend that public revenue into public expenditure. But you know very well that expenditure is always greater than the revenue in our country. But we can't escape from the expenditure. We can't escape from spending the money on the people by the government. For that reason, the government have to depend on these type of debt. So basically, the public debt is the amount of money that a government owes to outside debtors. When the government borrows the money from the institutions to complete its expenditure, that is known as public debt. Actually, they have to raise this debt. Why? Because they want the development of the economy and they need the money, but they are not getting the money in the form of public revenue, in the form of tax, in the form of non-tax revenue. So if the income level is low, we can't do anything, but we have to complete our expenditure. For that reason, government raises the fund to grow the economy. So politicians prefers to raise public debt rather than raising taxes, because when the government raise the tax, it obviously affect on the common public, and they usually don't like this decision when the government raises the tax rate. So that's the reason politician in the favor to raise the public debt, means borrowing the fund. And one very important point here is when public debt reaches 77% of GDP or higher, the debt begins to slow growth in the economy. Let's have a look on the definitions of public debt. The first definition is given by Philip E. Taylor. The debt is the form of promises by the Treasury to pay to the holders of these promises a principal sum, and in most instances interest on the principal. Borrowing is resorted to in order to provide fund for financing a current deficit. Basically, deficit means gap, and when there is a gap between receipt and payment, then they have to rely on the public debt. The next definition is given by Carl S. So, the receipt from the sale of financial instruments by the government to the individual or firms in the private sector to induce the private sector to release manpower and real resources and to finance the purchase of these resources or to make welfare payment or subsidies. Obviously, the government needs the money for the subsidies, for giving the subsidies to the people for their welfare, and many more things which usually the government do for the public, and they have to rely on these type of public debt to raise the fund. Obviously, You have read about the shares, debentures. In the same way, the government issued the financial instruments to the individual or firm to raise the money for completing their expenditure, completing their public expenditure, not their expenditure. So basically, public debt is divided into two types, that is internal public debt and external public debt. It is understood from the word internal and external. Let's have a look on these points. So internal debt or domestic debt is the part of the total government debt in a country that is owed to lender within the country. Obviously, when there is written as internal public debt means when the government manages to take the loan within the country, not going outside the country, not offering, demanding the help from the foreign banks, but managing the problem of deficit from the country itself. So basically, internal means when the government manages to raise the fund within the country. So the next point is external public debt. So it would be the opposite of internal public debt. External debt is the portion of a country's debt that is borrowed from foreign lenders through commercial bank, government or international financial institutions. I mean, when the government borrow the fund from foreign institution, foreign financial institution, that is known as external public debt. So if a country cannot repay its external debt, it faces a debt crisis, a major problem for the country, for the nation. So the next, concept is causes for the increase in public debt. What are the reason that public debt is increasing? First of all is that we are not getting that much income which we require to complete our expenditure. This is the basic reason that we are not earning that much. We means the government is not that much earning the amount which is required to complete the expenditure of the public. And so the basic, there I listed only 6 points and there can be many more points. What are the reasons that the public debt is growing? And you can very well understand that increasing a public debt is not a good thing for any country. The country is increasing the burden of debt in their shoulders. So we will have a look on what are the reasons that we are increasing the public debt. So the first point is war and preparation. As we have discussed in the earlier videos also, that no doubt in the last decade, in the last 2 decades, we never faced any war type situation, but you know very well that the government always focuses on the security, on the protection of the public. For that reason, the government have to be ready with the war like situation with the advanced weapons. And for purchasing the advanced weapon, they need a huge amount of fund. So that's why they have to take public debt to raise the fund for purchasing the war weapons. So it can be one of the major reasons. And the second point is social obligation. Obligation means responsibility. And obviously the government have to focus on the society, on the social welfare. Social welfare means providing the health services to the public, providing the education service to the public, transportation, insurance, etc. There are a lot of things that the government is doing for the public. For that reason, they need a huge amount of fund. They are providing free education in the government schools. They are offering many schemes. They are providing free health services and many other services provided by the government. So for that reason, they have to rely on the public debt. So the next point is economic development and deficit. At the same time, if we are completing just the needs of public, then we will never grow. For growing, for increasing the development of the country, we need a huge amount of fund. Why? Because if we want to develop the country, in compare to other countries, we have to be ready with advanced technologies. And for acquiring advanced technologies, we need a lot of fund. And if we need a lot of fund, then we have to raise the public debt to complete this need. So next point is employment. Most of government of modern days face the problem of unemployment, and we are also facing in our country. And it has become the duty to solve this by making huge public expenditure, like to solve the unemployment problem and to fight recession. The government has to make huge expenditure. For this, the state have to resort to public debt. So basically, we are also facing unemployment problems, that people are not finding a suitable job for themselves, but for that reason the government is providing them the amount for unemployment relief, so that they can have some money for their necessities. And if the government is providing the money without giving them any work, without they are doing any work, they are getting some money, so what is that usage of that money? So the government manages to give that amount of money to unemployed, so that they can earn their living, so they can complete their necessities. The next point is controlling inflation. So the government can withdraw excess money from the circulation by raising public debt, thus prevent price from rising. And the last point is fighting depression. Like during the depression phase, private investment is lacking. The private sector is lacking in the fund. For that reason, the government applies compensatory public spending by borrowing from internal and external sources of public debt. I just listed here the 6 points, but you can find a lot of points. What are the reasons that the government have to depend on this public debt? So you understand what is public debt. It means raising the fund from any sources, from internal, from external, from any financial institution. Now we will have a look on the redemption. Redemption of public debt means how the government manages to pay the public debt. So the first point is refunding. Refunding of debt implies the issue of new bonds and securities by the government in order to repay the matured loans. You know very well the shares and debentures. In the same way, the government also issues the securities in order to repay this fund. So actually, if you understand the depth of this point, is to meet liability, they are creating extra liability on that. So it means indirectly they are not just paying the amount, they are creating another liability to repay the earlier liability. So next point is conversion. Conversion of public debt implies changing the existing loan before maturity into a new loan at an advantage in servicing charges. In fact, the process of conversion consists generally in converting or altering a public debt from a higher to lower rate of interest. So basically, it is also a kind of method, like they are just converting the old loan into new loan for getting the advantage of new interest rate schemes. So the next point is surplus budget. Quite often, it never happens, but surplus budget, that is by spending less than the public revenue obtained, may be utilized for clearing of public debt. I will give you here example. Suppose the public revenue is 100. Okay. So the government is spending only 80 rupees by decreasing the expenditure. So they manage to save 20 rupees from the income. So they will use that remained income in paying this public debt. So it's oftenly happened, but usually the income is always less than the expenditure in our country. So the next point is a sinking fund. Sinking fund is a fund created by the government and gradually accumulated every year by setting aside a part of current public revenue in such a way that it would be sufficient to pay off the funded debt at the time of maturity. Perhaps this is the most systematic and best method of redemption. So the next point is terminable annuities. The method of debt redemption is similar to that of sinking fund. Under this method, the fiscal authorities clear off a part of the public debt every year by issuing terminable annuities to the bondholders which mature annually. Thus, it is a method of redeeming debt installments. So basically, in installments, the government manages to pay the debt. The sixth point is additional taxation. It is the simplest measure of debt redemption is to impose new tax and get the required revenue to repay the loan amount. So basically, it is not usually used by the government because I told you that nobody likes the increase in the tax rate. So the next point is capital levy. The capital levy is strongly recommended by Dalton as a method of debt redemption with the least real burden on the society. What it means? It refers to very heavy tax on the property and wealth. Like you know very well that people are very interested in buying the property. So if the government manages to increase the tax rate on these type of things, then the government manages to create a revenue higher so that they can pay the debt. So the last point is surplus balance of payment. So basically the redemption of external debt, however, is possible only through an accumulation of foreign exchange reserve. So if the government is having foreign exchange reserve, about the balance of payment we will have a study on another chapter. So for now you have to just learn that when the government is having excess foreign exchange, then it would be a great opportunity for the government to pay the public debt. So at last we are finishing our today's video, and here it's your task to do, that is assignment question. The first question is what is GST? Explain its components. The second question is explain the advantages of GST. The third question is what is public debt? Explain its type. The fourth question is what are the main causes of increase in public debt? And the last question is explain the methods of redemption of public debt. I hope you have enjoyed the video and learned a lot of new things from this. So that's all from my side for this video session. Thank you students. Assalamu alaikum. Take care.